This is the Value Investor Podcast with Tracy Reinick. All things value, all the time.
Welcome back, value investors. So the last week I've been thinking a lot about gold, and maybe you have been too, because it's busting out to new all-time highs. It's now around $3,600 an ounce. The prior high from a couple of months ago was $3,500 an ounce. And this is actually inflation-adjusted all-time high as well from the late 1970s, early 1980s. But I don't know if it's just me, but in addition to just thinking about gold, I was considering the miners, of course, because they are the frontline type of thing you can buy if you don't want to go out and buy the actual physical metal in the form of, the bricks you can buy, the ounces you can get at like somewhere like Costco, or coins or jewelry or wherever else you may find your gold these days. So the easiest thing for me is just to buy the gold miners, because they are getting it out of the ground and selling at these really high prices. And most of them are unhedged, although I have found one stock so far in my journey through the various gold miners that is partially hedged, but most that I've encountered are unhedged, and that makes sense because with gold at these highs and still with upward momentum, you don't think it's going to be declining, at least not significantly, and so you do want to have access to as high a price as possible when you are selling it. So one thing to remember with the gold miners, though, always is that it's about execution with them. And there's always things going on with gold mining, the same way with oil and oil drilling. So you could have weather issues. There could be geopolitical issues. You could have a government take over your mine. You could have labor strikes. You could have a pandemic that might shut down your mine. There's a lot of things that could go on with gold mining. And so execution, some things in their control, but also some things outside of their control. But if they can control the things they can control on the execution side, then that's the companies you want. So you want companies that get it out of the ground. But also with investing in the individual miners, it does matter, possibly where they're located, where are they headquartered? Is that somewhere stable? So a lot of people like to own the miners that are either US based or Canada. There's also Australia, and you get South Africa and other African countries where we get some headquarters. This also makes sense based on where we're finding gold is in a lot of those locations, although there is gold mining just about anywhere around the globe. And these companies are trying to find new supply always. And that's also why we're seeing in this time of high gold prices, a lot of consolidation in the industry. The big companies are going to get bigger as they're in the hunt for more gold at these all-time highs. So they will buy the smaller gold miners to add to their production, basically. It costs a lot of money to open up a new mine. We've seen that with some of these gold miners. They are still investing in CapEx, but it can take years, and then you may not get out as much gold as you hoped, and then you're hoping to get it out at these highs, but what if gold isn't as high a couple of years from now? So there's a lot of factors that go into play with these miners, but I still like owning them during these bullish periods in gold like we have right now. Silver is also very bullish, but that would be a separate episode on silver miners. And also remember, some gold miners do also mine other metals, including silver, but also nickel, and sometimes copper is thrown in there too. But we're focusing just on the gold here. So since we're the value investors, I wanted to take a look this week at which gold miners might have decent Zacks rank. And by decent, I mean number ones, which are the strong buys, number twos, which are the buys, or number threes, which are the holds. So we had a lot of number ones and number two's right after the earnings, but that was a couple of weeks ago, so things have quieted down. And that usually means the Zacks rank will just kind of fall into that hold area, and a lot of them are, because I did a search. I did a screen for the Zacks rank, also with gold mining as the industry. Yes, you can search for that on the Zacks.com screener, stock screener. And then I looked for PE of 20 and less. And this is the forward PE with F1 if you're using our screen. The trailing is looking backwards. So I like to look forward because the analysts have been raising their estimates on the hotness of the gold and what the companies are saying in their earnings reports. So we're getting, we want to look forward right now in this industry. So I screened for just those three basic things: gold mining, PE under 20, the forward PE, and then the Zacks rank of 1s, 2s, or 3s. And I got 15 matches. So the highest PE was 18.65, and the lowest is 2.5. Now, remember what I've always said about very low PEs? You do have to be a little cautious on very low PEs. A 2.5, you're almost giving it away, basically, at that. You're giving away those earnings. Why is it that low? Is there something I don't know? Is there something going on? These are things you have to ask if you're looking at a company with a PE that low. It could also just be that it's being kind of rejected by the street, and they're not following it for whatever reason. So let's take a look. What is happening with that stock that's at this kind of PE 2.5 on the PE side? Okay, it is NAMIB, NAMIB, NAMIB Minerals. And the ticker is N as in Nancy, A as in Adam, M as in Mary, M as in Mary. So 4 letters, NAMM. So they are in Zimbabwe in Africa, and they're tiny. Market cap of just 162 million. So that could be contributing to the low PE in a way, because we only have one estimate on them, but we do have one. That's how it got the Zacks rank. And also by screening with the Zacks rank, you are obviously only going to get the companies with at least one analyst covering them. And that is what I want. I want to make sure we have at least one that's covering any of these gold miners. Some of the gold miners may not have much analyst coverage at all because a lot of them are foreign companies. And so that's just a little less covered. Also, gold mining has been out of favor for, 15 years at least. And so if you were going to a bank and they asked you what industry do you want to be in, not as much on coverage of the gold miners, right? Same with silver, but you're just not going to get as much. Right now, it's really interesting area with record free cash flow, record earnings, and a lot going on, but it hasn't been for a long time. So NAMIB only has one estimate, but that's enough for us. And let's look at it. It's a number 3, by the way. It's got a C for value, B for growth, F for momentum. It is a stock under $5. Keep that in mind as well. It's trading at $3.29 right now. But I want to take a look at those estimates. So it's only on the year. And last year they lost $1.24. This year expected to make $1.21. I'm not investigating. I'm only looking at the screen and looking at Zacks.com for this podcast. So negative last year would have meant they weren't getting it out of the ground. Positive this year could mean they have one mine and now it's producing. So keep that in mind. But $1.21 for this year, and then next year up 52% to $1.84. Nobody's raising. Looks like this analyst maybe just started coverage because we only have some estimates for the last week, actually. So this would be a new one, a new entry here. And So it's cheap because it's trading down there under $5. And so we get the 2.5 because they're expected to make $1.21 and they're trading at $3.29. So that's where we're getting this very low PE. We don't have a PEG or anything else right now. So we're going to have to keep an eye on that. But definitely tune into any conference calls if you can find those and look and see what is going on for them now that they do look like they are, actually turning it around here, and see what's happening. But it's hard with these small foreign gold miners. If you are going to go that route, try to go for the bigger foreign gold miners because there's just a lot more analyst coverage. They've been around a long time. They have more mines in, global locations. It's easier to get information on them. So keep that in mind. Also, always remember, even as a value investor, that the cheapest stock by PE or price to sales doesn't always indicate the best option. So keep that in mind. But since this screen, we're looking for these cheap gold miners, I'm talking about it. So that's Namib Minerals, NAMM. Okay, then let's look at another cheap stock. I'm not familiar with this one either. Dundee Precious Metals. Dundee Precious Metals. They have a PE of 8.48. They're also a number 3. So this one, that's a little more in my wheelhouse, right? This one has 5 letters for their ticker: D as in David, P as in Paul, M as in Mary, L as in Larry, F as in Frank. DPMLF. And that's Dundee Precious Metals. And so let's see what's going on with them. They are in Canada, but they have projects in Bulgaria, Serbia, and Ecuador. And let's see what their market cap is. A little bit bigger, as I would have hoped, but still not huge, but 3.2 billion market cap. They do pay a dividend. So I like getting dividends. A lot of these miners are also doing share buybacks right now. I didn't look up to see if Dundee was, but they have a dividend of 16 cents for the year. It's yielding 0.8%. Many of the miners, despite record free cash flows, are not putting the money back into dividends. Not yet. They are doing the share buybacks because that's easier. They're not sure how long this money is going to stick around. So share buybacks for now, but the longer this goes on at these record levels, the more I expect to see some special dividends or variables that they start throwing out there, because you can only buy back so many shares and you need something to do with all the money. It's a rough time for these gold miners, let me tell you. A lot of them are, and yes, that was sarcasm, a lot of them are putting it back into the business, into CapEx, and also paying down debt. The miners are heavy debt types of companies. They have to be. They have to go open up the mine, and that takes a lot of money, billions in some cases. So they are paying down that debt. That's what we like to see. That's what we saw with the oil a couple of years ago when they had very high prices as well. So we're liking all that. This stock trading at new 5-year highs, and it is right around $20 a share. What else we need to know? Forward P of 8.4. Let's take a look at what is happening with those estimates. How many analysts do we have on this one? Because I'm not familiar with Dundee, but there are 3 estimates for the year, for this year and next year. And then we do get some quarterlies with this one, and we have 2 estimates on the quarterlies. So not surprising, this year's earnings expected to be up 76.7%. to $2.28 from $1.29 last year. And then next year, for some reason, it's declining 26% to $1.68. Again, I'm not sure what's going on there, but one estimate is lower in the last 30 days and 2 in the last 60 days for next year. So something may be happening with the mine. Maybe they sold something, not sure. So keep that in mind when you're watching any of these gold miners. But we have, strong earnings growth, also strong sales growth expected to be up 26% this year, but declining 17% for next year. It hasn't stopped the stock, and it still is cheap, but that's Dundee Precious Metals, DPMLF. So make sure you go in, check out why next year we're seeing that decline. I want a gold miner that is growing it for next year. So I would need to know what is going on there. But again, maybe that's why it's cheap, right? So let's go to number 3. Third one I picked out of the list, Centerra Gold. C as in Charles, G as in George, A as in Adam, U. CGAU is the ticker. They're also a number 3. So most of these on the screen of 15 were number 3s. There was one number 1 and one number 2, but we haven't talked about those yet. Market cap of $1.7 billion. Also a dividend, 20 cents a share, yielding 2.39%. That's actually pretty high for most of the gold miners. There's not many that are paying over 2% right now. So I'm liking that if you're looking for a little bit of a dividend, but we're in it for the record gold prices. Forward PE of 10.1. That's still cheap. Remember, a PE of 15 or under is considered value, but anything 10 or under is dirt cheap. So this is still cheap. PEG ratio, we get a PEG with this one. Small cap miner, but it's got a lot of growth going on, as it should right now. Looks like we got a lot of analysts on this one. It is in North America, Asia, and other markets, headquartered in Ontario, Canada. It also is in British Columbia. They have a mine in Turkey and Kyrgyz Republic. So they're all over. I'm liking that. Let's take a look at those detailed estimates. This is really what you can do on your own on Zacks.com as well. So we have estimates for the full years and also for the quarters. We only have sales for the full years. But this year, 2025, earnings expected to be up 18.3 to 84 cents from 71 last year, 71 cents. Then next year, we're seeing a big jump, up 31% to $1.10 for next year. That's what I want to see. If these high gold prices continue, I want to see someone bullish about next year as well. Although it's still a little early, we're only in September, but we are starting to look ahead now for next year. And we have kind of a mix on the estimates. So we have a lot of estimates on this one, six for the full years. And we have 3 higher for this year and 2 lower in the last 30 days. And we have the same for 2026. But it has been pushing up the Zacks consensus on both years, starting to trickle up a bit there. They've had a big beat last quarter, but it's been hit or miss before that. And so Centerra Gold, also interesting, also under $10 at $8.36. And this one not busting out to 5-year highs. Let's take a look and just kind of see. Most of the gold miners are up this year because of the price of gold. And I'm putting it in the interactive chart now so we can kind of see what each of these are doing. MLF, and let's see, NAMIB is NAMM. They all should be pretty good. But no, they aren't. This is where you look, right? So NAMIB is the worst performers. Over the last 6 months, it actually is down 92%. So, we only have data going back to June. So they might have just come on the market in June and then it's getting whipped around. It's a small cap international stock. But the other two are up over the last 6 months. Centerra Gold is up 44.4 and Dundee Precious Metals is up 62 during that amount of time. And so that is beating the S&P 500, obviously, and it's outperforming gold, just the precious metal itself. Let's see, even though that's hitting new highs and is very hot, it's not quite this hot. So gold itself in the last 6 months is up 23%. So the gold miners are starting to detach themselves a bit from the gold price. We haven't seen that in the last year or two, but now it is starting to happen because we're buying the businesses of the gold miners now. And this is the time when you want to be in them. You want to be in the ones that are able to get it out of the ground with gold at record prices to get those free cash flows and for them to pay down the debt and give you money back. This is the time. So this is why it disconnects, because you're actually getting a little bit more in the deal if you buy one of the gold miners, because you are going to get dividends or share buybacks back to you, including some special dividends, most likely. So those are three of the cheap stocks on this list. Another one, I did want to tell you what the number one and number twos are. So the number one is Drudge Gold. I can't even pronounce it. It's DRD Gold. And the ticker is DRD with that one. And they are trading just at 12 times for this number one. And why would this one be a number one? I'm assuming we have more recent estimates that are higher. We don't have a market cap on DRD Gold. Why is that? Where are they from? South Africa. And they also are in Australia, Asia, it says. So we might not have a lot of coverage on it if we don't even have a market cap here. But 2025, and now it looks like they might be on the other year, the like half year. So we only have one estimate on them. And that's because some of these companies report, only once every 6 months. And so the analysts, it gets a little wacky there. But we do have one estimate higher, which is what I assume to get the number one. And it's in the last 30 days. So they're expecting to make $1.62 now, and that's up from 90 cents. We don't have anything for the next fiscal year. Fiscal 2026, perhaps. And then we have nothing for next year. So the analyst is just kind of concentrating on this year. But earnings are expected to be up 13.3% from $1.43 up to $1.62. So this is also the issue, as I keep mentioning, with the gold miners. They are a lot of foreign companies. They're not as widely followed. So keep that in mind. It's just harder to invest in some of these, even rank kind of telling us something good is going on there. But the number two is one that is much better known, and it's Gold Fields, ticker G as in George, F as in Frank, I, GFI, the number two, which is the buy. It's a $30 billion market cap, does pay a dividend of 62 cents or 1.8%. This is busting out to new all-time highs, new 5-year highs. I should check and see if it's all-time, but 5-year highs. And this one operates in South Africa, Ghana, Australia. It's one of the largest unhedged gold producers at 30 billion market cap, as I mentioned. That's why everybody knows Gold Fields. So if you're really like, Tracy, I don't want to know all of the stuff about these small gold miners. I don't want to go figure it out. I don't want to know why earnings are expected to drop for next year. I want someone to just tell me, then Gold Fields would be for you. So forward PE is still cheap at 13.4, has a PEG ratio of 0.37 because those earnings are really ratcheting up. With every time gold hits new highs, these unhedged gold miners, the earnings will follow. And the analysts are having a hard time keeping up. So they're not going to readjust every day. There's no reason to do it every day. But as we get a longer period where it's trading at these new highs, they are going to have to go in and adjust higher or wait until the next earnings report, which is a couple months away now for some of these companies. But Goldfields expected to see earnings up 93.9% here in 2025, and then another 22.9 for 2026. Estimates are up. That's why we got the number 2. One up in the last 30 days for this year, one for next year, and we only have 3 estimates on them in total. So even though they're one of the largest of the gold mining stocks, again, there's just not that many analysts on the gold miners because they've been out of favor for so long. It doesn't do anything for your career, right? To be in an out of favor industry. So you'd rather be in tech, you'd rather be talking about Tesla or Palantir than you are the gold miners, except for right now. So Goldfields, keep this one on your watch list too. It is still cheap. No quarterly. No, we do have a few quarterly, just one though. One estimate. So one analyst going in there to give a little bit of color for the quarters. But yearly is what we are watching, and that is looking real solid. So also 2025 on the sales side, up 71% to 7.7 billion from 5.2 billion, and then another 19% expected for next year to 9 billion. It's all about execution with these big cap gold companies, and that's why I do like the bigger caps. You can own a mix, or you can own the ETF, which is G as in George, D as in David, X, the gold mining ETF. That's one of them. Nina and I talked about several of them. There's a couple that are a little bit cheaper on expense ratio now that are out there, but the old standby for the large cap gold miners is GDX. The smaller cap gold miners is GDX, which is the same, but J. Add on that J as in junior, and you'll get the VanEck junior gold miners. And this one is also soaring. You could do both, but there's just not as many of the juniors anymore. But much like with oil companies, sometimes the smaller cap companies have bigger upside when you get in a bull market like this than the large old standbys like a Newmont or a Goldfields or those types. But the GDXJ is at new highs as well as the GDX. And I do believe those are all-time highs for at least the GDX. So keep that in mind as well. I don't think this rally is over. I still like these gold miners because of what's happening with those free cash flows. I just like getting cash. What can I say? And they're going to have to give it to us at some point. Right now, it's in the form of share buybacks mostly, but that's putting a floor under a lot of these stocks. And we have just a standard dividend with many of them, but the longer it goes into these record territories, quarter after quarter, the longer then they may start instituting these variable dividends. So that's when we'll really see the money. So take a look at some of these cheap gold miners. Do your own screens. They're all pretty cheap. We saw 15 that are trading at 18 and under right now. That's a lot of cheap stocks. And keep an eye on the gold price, of course, and then on their earnings. But again, I just caution, there are always execution errors with some of these gold miners. So one gold miner might not work in your favor. So definitely have diversity in what you're picking and or just buy those ETFs. So let's recap the cheap stocks again. So we had, well, they're all cheap, but we had Namib Minerals, N as in Nancy, A as in Adam, M as in Mary, M as in Mary, but it looks like they just went public maybe in June. They're in Zimbabwe. They're very small cap. So this one is the cheapest at 2.5 times, but there's not much known out there. So keep that in mind. Then we had Dundee Precious Metals, D as in David, P as in Paul, M as in Mary, L as in Larry, F as in Frank. They're in Canada, but they have global mining. Then we had Centerra Gold, C as in Charles, G A U, CGAU. And they are also in Canada, right? Or were they Australia? I'm missing on that one now. But they also had some global operations as well, as many do, because that's where the mines are all located. Ontario, Canada for that one, but global mining. Then we had DRD Gold, which is ticker DRD, which is just the Zacks number one rank, but also still cheap. And then we added on the other cheap number two, which is Goldfields Limited, ticker G as in George, F as in Frank I, GFI for that one. And just out of curiosity, so that you can go run these screens yourself as well. But Newmont, one of the largest, even bigger than Goldfields, did make this list. It has a forward P of 14.3, and it's the number 3, ticker NEM. And Barrick, also one of the mega miners, has a PE of 13.65, also made this list, ticker just B as in boy, B as in boy. If you buy the GDX, two of the largest positions will be Newmont and Agnico Mines, which is AEM as the ticker there. And they make up, I think, more than 20% now of the ETFs. So you also get exposure to all of these in those ETFs. And again, those tickers are GDX for the big cap miners and GDXJ as in junior for the junior miners. So easy to remember. And this area is hot. I keep doing podcasts about it, both on the Market Edge and also here. I'm starting to, at least, on the Value Investor. But we'll be covering it as long as they're cheap and they have momentum and good Zacks rank here on the Value Investor Podcast. So be sure to subscribe. Get us on YouTube. We're on Zacks Podcast on the YouTube channel, and we're on Apple. We're on Spotify. We're on Amazon Music. Just about anywhere you can get podcasts, you can get us. And be sure to subscribe somewhere to get us next week, where I'll be back with some more value stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.